Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the euro currency. So here currently you could see price shows very logical, natural performance as on the intraday charts. So we'll show you a bit later as on the daily chart. So recall what we talked about in the weekly report. We said that it seems that market is getting some relief from the pressure on anticipation of the tighter Fed policy in the nearest term. So it seems that the active steps from the Fed now is postponing a bit for a couple of months from the September to November, mostly because of the softer statistics on the CPI. It seems that inflation is sailing and maybe Fed is right concerning inflation, and a bit softer data from Michigan sentiment analysis. So that leads to review by the big banks and economists the perspective of the Fed activity. Still, the turning point is not passed yet, as everybody will be watching for September non-farm payroll release. So they're interested not only about the payroll numbers, but also about the inflation, wage inflation, and unemployment itself. So weaker and soft data in September just will bring more foundation to hypothesis, the suggestion that indeed maybe activity from the Fed will come a bit later and should support all dollar rivals, including the gold market and including the currencies. But at the same time, guys, currently I see another source of the risk that could make impact on the markets, and this is Afghanistan. So why I'm worrying about it? First of all, you probably know, and everybody knows, that bargain hunters like to blow up some news, trigger the overreaction, and trying to get the profit from this collapse that has happened in this country. So this is just common thing for markets right now, is trying to use some external news, which actually has very small relation to the Europe, very small relation to the United States in general, and trying to use this news for getting the bargain result on the markets, to shake the boat for these purposes. Why I think so? That if you will take a look at the dynamic of the euro currency and dynamic of the gold, they start moving in opposite directions. That usually happens when risk aversion stands on the market. So traders turn to the gold as the safe haven, and traders turn to the dollar as the safe haven. So they are starting rising together, while other currencies starts dropping. And here we see something of that sort currently. So if you take a look at the gold market, you will see that gold is rising while the euro currency is dropping right now. This this process of the focusing on Afghanistan events currently is starting, so it hasn't reached yet the peak. But I am afraid that really could happen, and that could make impact on the overall performance. And this could put the shadow on the positive news from the economic statistics in the United States, and positive news for the markets that Fed action is postponing. So for some time, supposedly, not maybe for a long time, but for some time, from this week probably this could happen. So be aware of that. So if you intend to buy euro on some intraday charts, trying to consider very strong levels where it will be relatively safer to do, and keep in mind that Afghanistan events and using of the news to shake the boat could make impact on the markets. So that's why currently, guys, since we've got the rubber recently that we discussed, with the background of this news, we still keep the primary area to consider taking the long position on a daily chart, the 1620 level. So maybe market could turn up from the intraday patterns on intraday charts that I will show you a bit later. But the primary and safer area to focus on, especially if you trade on a daily chart, stands right here at 1620. Especially when you have the grabber that suggests the taking out of these lows. Now let's take a look what we have on intraday charts. On the 4 time frame chart, you could see that market is dropping out from the XOP. So if you have taken the short position here, that might be very good trade for you. So we have suggested that here should be some pullback out from this area. This first moment. Second moment, we said that market could show some strong upward action only when it will break through the cluster resistance that stands in the 18 new and 1830 area. Multiple 618 levels stands here, and only if market will show the upward breakout of these areas, we could start talking about deeper, stronger upward retracement on the daily chart. Currently, with the period of the grabber on the daily chart and with this type of action and Afghanistan news, that might be, well, a bit tricky moment to suggest on the possible upward reversal. Anyway, if you will take a look at the hourly chart, here is some background exists where you could try, at least you could consider taking the long position if you trade on the intraday charts. Take a look. Our double repo sell pattern that we discussed. It's worked nice. Actually, it's already hit the target right here because thrust starting right from this point. And here market hits the 50% of the thrust. Now it's even coming to the 618. That is the minimum target that double repo should reach. And actually, it already has happened. And at the same time, market is forming kind of the ABCD pattern. So if you still hold the short position, you could focus, for instance, on the OP target. It's AB equals CD. It's right around 1758 support area. This agreement support has potential looks strong. Alternatively, for taking the long position, that's the same area that you could consider. If, hopefully, Afghanistan events will not make impact on the markets and it will be some easy topic. In this case, that area might work for a bounce, or if euro currency proceeds with the new sentiment, new background that we discussed in the weekly report, then it might be the starting point for another leg up and attempt to break this resistance area. So, other words speaking, this is the key level here to consider taking the long position if you would like to. Besides, take a look. The CD leg here currently stands relatively flat. It is slower than the AB leg. Also, we will get here regardless triple to buy pattern as we discussed. So at first touch of the OP in the 1758 area, with a high probability we should get some bounce. If you intend to take the long position here, try to use this bounce for moving stops to the break even. That is a necessary thing currently in the current market because the situation is becoming tricky right now. So news could really bring some chaos on the markets, and not just because the news itself are important, but just because big banks will try to use it to shake the boat, trying to appeal to this news and put them in focus, justifying the necessity of the big moves on the markets, not only on the Forex but on the stock market as well, I suppose. So that makes us to be extra careful currently, especially on trading on intraday charts. That being said, currently, we are not excluded that market could reverse up from this area if political events will not become the dominant factor currently on the markets. So for scalp traders, this is an area to consider taking a position with the obligation to move stops to break even as soon as possible. For other traders who trade on the daily chart with the grabber on the back, it would be better to do nothing and keep focus on the 1620 area if you would like to take the long position on the euro currency. Theoretically, it is possible to keep short position until the grabber is valid, but guys, this is very personal. So especially if you already have taken the position and we're coming to the strong intraday support, it's up to you whether you would like to keep position with this daily grabber. Theoretically, it's just drop below these lows. So it might happen, but I think that some external factor should work to trigger this downside action because it stands opposite to the economical background, economic fundamentals, and the sentiment background on the markets. So, as you can see, situation is not very simple. That's why be careful, think twice before to do something, and keep watching on the scenarios, patterns, and levels that we have just specified.